Hello everyone, hope you all are doing great. Today we will learn about accounting for estates and trust. It is chapter 19. In this chapter, you will learn some legal terminologies related to estate and trusts, and at the same time we will focus on the process of asset allocations and distributions from an estate. Well, there are some topics related to tax. We will not go deep into those topics. So let's start. The term estate simply refers to the property or assets owned by an individual. However, in this chapter, estate is more specifically defined as a separate legal entity holding title to the real and personal assets of a deceased person. Thus, state accounting refers to the recording and reporting of financial events from the time of a person's death until the ultimate distribution of all property the state holds. When a person dies, several disputes may arise related to the distribution of that deceased person's property. So every person should prepare a will. So what is will? Will is actually a document, or you can say a person's declaration of how he desires to distribute his property after his death. So it actually is really useful to avoid any disputes related to the distribution of his property. So when a person dies with a valid will, it is called the person dies tested. And that will be used as a blueprint for settling all these estates and distribute all remaining assets and anything related to paying tax. And the will can also tell whether we need to appoint a fiduciary to accomplish all these tasks. On the other hand, a person could die without a legal will, which is very common. And if that happens, it is called they die intestate. And in this situation, we have to check what are the state laws to distribute and administer those states. So when there is any intestacy, then usually real properties are distributed based on laws of descent and personal properties are distributed based on laws of distribution. So every states do have their laws related to wills and estates, and those laws are known as probate laws. And there is one institution, the National Conference of Commissioners on Uniform State Laws. That institution developed the Uniform Probate Code. Most of the states adopted the Uniform Probate Code. Well, some states don't follow Uniform Probate Code, but they do have their own law and regulations. Those are similar to those Uniform Probate Code. So these probate laws, whether these are from Uniform Probate Code or state specific laws and regulations, these laws do have three specific goals: to gather, preserve, and account all the property of a dead person, and then settle all the debts, and then also discover and implement the decedent's intent for remaining property. So now how does the process start? The process usually starts by filing a will with the probate court, or if there is no will, it will also be reported to the probate court. So, if a will is found, then the probate court will check whether the will is valid or not. And the will also need to fulfill all legal requirements. The will cannot be vague and non-specific. For example, a person could write and sign on a document that I want my children to have my money. So it's not precisely specific, or it does not meet all legal requirements. It does not clarify whether the person wanted to have just all his cash assets or convert non-cash assets into cash and pay everything to his or her children. So here the will must be specific and the will must meet some legal requirements, and the probate court will check the validity of the will. So if a will is identified and considered as a valid, then the next step, the court will also locate all of those properties and assets. If there is any debt outstanding, the debt will be paid, and then the distribution process will start. So here we will also see that the court will appoint a person who will play a fiduciary role for the distribution process, and this person plays a very important administrative role, and that person will confirm that the distribution process is followed by all rules and regulations of that state, and it also fulfilled the deceased person's wishes and intentions. So if there is a specific will and the will specify a person or individual's name who will play that stewardship or fiduciary role, then that person is known as an executor. If the person is a female, then she will be known as an executrix. But some cases you will see that there is no will, or even there is a will, the will may not state whether there is a person as executor or executrix who will play the fiduciary role to distribute all properties and assets. Or a will may also include a person's name as an executor, but the person may not be able or may be unwilling to play this role. In this type of situation, a court will appoint a representative, and in that case the representative will be known as an administrator, and if she is a female person, she will be known as administratrix. So these are just some legal terminologies. So an executor or an administrator, they will not play this role like at free of cost. They legally are entitled to receive a reasonable compensation. An executor or an administrator plays an important role. Whether the person is mentioned in the will or whether the person is appointed by the court, the person will take possession of all the property left by a deceased person. And then the person or the executor will keep record and make an inventory of the property. At the same time, the person will identify if there is any debt or if there is any claim against any of the property. And then also it needs to pay federal tax and state tax related to the property. So after fulfilling any claim or debt and paying the tax, the executor will start the distribution process, and the executor needs to make sure that the distribution process is completed according to the deceased person's intention, which is mentioned in the will, or according to the order of the court. And the person also needs to establish that the process is completed following the rules and regulations, and also it reflects the intentions of that deceased person. So the state accounting, main base for state accounting is the property left by the deceased person, and for state reporting purposes, all items should be recorded as per the fair value. As I mentioned that there might be some claim against the property, or it may need to pay some debts related to the property. So it's very important to measure all the property based on the fair value. So some common examples of the property or the estates are cash, or any investment in stocks and bonds, or there is any accrued interest, or any type of dividend that was declared before the person's death, or any type of investment in any business, or the deceased person could work for a company and he was entitled to receive salary and wages, or if there is any accrued rents or royalties, or it could be also some sort of valuable property such as paintings or jewelry. However, some state law requires that some sort of property such as land, building, or automobile, those will be directly distributed to the beneficiaries or the co-owner at the time of the death. So if that specific state requires that those type of property like land, building, or automobile, those will be going to the beneficiary, then the executor will not include those properties. And then the distribution process will start, although those type of building, automobile, or land, or some cases it could be some other personal property, those may directly go to the beneficiaries, but those should be recorded and reported by an executor. The executor will also discover if there is any claim against any of the property. So usually a public notice is printed in a local newspaper once a week for 3 weeks, and in some states it requires that all claims must be presented within 4 months of the first of these notices. And if anyone comes with a claim against any property, the executor will verify the validity of the claim. And then, of course, the claim will be paid if the claim seems valid. But how the payment will start, there is some order of priority. First, we have to pay for the administrative expenses related to the distribution and the estates. And then we have to also pay the funeral and medical expenses. For example, if there is any bill related to the last illness, and if there is any debt, of course you have to pay that, and federal and state taxes. And after paying all these obligations, if there is any valid claim, that claim will be paid. And at the same time, there might be some unsecured obligation such as credit card debt. Those will also be paid before starting the property distribution process. As we discussed before, that most of the states, they follow the Uniform Probate Code, and some states, they do have their own rules and regulations. No matter a state follows the Uniform Probate Code or follows the own state specific rules and regulations, those acts and laws try to provide some amount of protection for a surviving spouse, or if there is any minor or dependent children. And most of the cases, small monetary allowances are paid to these type of parties before paying any legal claims. And some common example is a homestead allowance, or sometimes a family can also receive a frequent, like a small amount of family allowances. And family members are also entitled to limited amount of exempt property. The exempt properties are automobiles, furniture, and jewelries. So those properties usually are not recorded by the executor and considered when the administration process will start on. So when a will is located, identified, and probated, then we need to pay all other expenses that gets priority. For example, the administrative expense, funeral and medical expense, if there is any debt related to that property, and of course taxes. We have to pay all these, and then we have to pay all claims. And then we have to start the distribution process. So if it is mentioned any gift of real property such as land and building, it is known as a devise. And usually most of the cases, those type of gift is very specific. On the other hand, a gift can be any personal property which is known as a legacy or bequest. There could be different type of legacy, for example, specific legacy. So this specific legacy is a gift of personal property which is very specifically identified. For example, a person could write on his will that I leave all my automobile collection or all my jewelry collection to my daughter. On the other hand, another type of legacy is a demonstrative legacy. Demonstrative legacy is a cash gift, and in this type of legacy, the source of the cash is specifically identified. For example, a person could write in the statement that I leave $10,000 from my savings account in Bank of America to my son. Another type of legacy is a general legacy. General legacy is a cash gift, but as opposed to administrative legacy, the source is not identified. For example, a will could say, I leave $8,000 cash to my cousin, but the source of that cash is not specified. Then another type of legacy is a residual legacy, and it's a gift of any remaining state property.